Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at Apple earnings just hit and we're seeing a dump. We'll look at that on the shorter term time frames in a moment. So looking at the daily chart here, we're going to see where we're trying to find support. We're currently trading just above 115, so it's not an all-out dump. We have a gap right here. Keep your eye on this gap, 114.56. And if we fill that gap, maybe we'll see the bulls turn around and try and defend after that gap fill, but we are going to be losing the middle Bollinger Band support. Well, I'm actually talking way too soon. This is all going to change by tomorrow pre-market. So we really need to be approaching tomorrow pre-market to see how things settle down a little bit. And again, right now we're at 115, but then we're up to 115.50. So we could be right around this middle Bollinger Band tomorrow. We are closing in on a bullish MACD cross. Obviously, this is going to be a setback. And the close up near the high of the day, certainly not indicative of the response into earnings that we did get. So we are seeing a pullback. Unless we break 111.55, the bulls are still maintaining higher lows on the daily time frame. If we break 111.55, that would be a very clear bearish break, and we're looking down to this gap fill at 105.72 if that level breaks. So don't forget that level, 111.55, very key support to maintain at this point. The weekly time frame, the 10-week support is 112.50, so we're trading still well above that level even after all of this downside. So all in all, not a huge reaction to earnings. We saw a quick pop and then a quick drop. Just a few dollars in both directions. Not going to make or break the chart in either direction. And we'll get a lot more clarity tomorrow after the action plays out, which we'll be able to update these levels and see where it all settles after a day of digesting by the market. So let's look at the 1 minute time frame. Initial reaction was bullish, big move to the upside up to 121.84, and then right away the bears started stepping in. Look at the bear volume compared to the bull volume, and as soon as we lost all 5-minute moving average supports, it was game over on this candlestick here. And now we're trying to build a base of support. The low we've seen is 115.16. Bulls have to get above 116.50 to see a higher high form on the 1 minute chart, but as of right now, the exponential resistance is still rejecting the price. So again, it's going to take a lot of settling down. We're going to see a lot of back and forth. Pretty much between 114 and 118 is where we can expect to be trading. And we'll see pre-market how things set up, how the moving average is set up. Here's the hourly time frame, losing all moving average support on the hourly. So no doubt about it, the bears are going to be favored going into tomorrow. But we'll see what key supports are most important. And again, 111.55 certainly stands out. I appreciate you watching. Hopefully, you weren't hurt too bad in these earnings. Our personal The Chart Guys mindset is to not make the gamble on earnings. In my opinion, it's a coin flip unless you have very significant dozens of hours of fundamental research, which the vast majority of us all do not. So we skip the earnings. It's just a gamble. Wait until the reaction to earnings when you can have the odds in your favor. And also, here's an example where having options is painful, because if you have common shares, there was an exit opportunity here after hours, and we had one member who said they exited up around 120, 121, and with options, you couldn't do that. Your hands are tied until tomorrow, and obviously on earnings, things can change on the stop of a dime here. So common shares for earnings, ideally over options. And if you're playing options, really, again, it's just a gamble and you're trying to hit it big. Nothing wrong with that as long as you understand that's what the risk is going into the trade. So we'll check back in tomorrow after hours, see how it all plays out. I appreciate you watching and hope you have a fantastic night.